The Reserve Bank doesn't expect to cut the cash rate until very late in 2024. I'm in the camp of thinking they'll probably be able to do it in the first half of next year, meaning fixed mortgage rates probably starting to come down before the end of this year. Hello again and welcome to another video from myself, Tony Alexander, presented with the assistance of NZHL. This week I want to have a brief recap of what happened with the monetary policy review from the Reserve Bank last week. Basically, they did exactly what everybody was expecting. They left the official cash rate unchanged at the 5.5% level it was taken to back in May, and pretty much just did a cut and paste job, saying pretty much exactly the same words in the statement accompanying the no change decision as they used back at the end of May. They are very confident that they won't have to take the cash rate any higher, and I'd say there's a fairly good chance that basically they are right, that this is going to be the peak for the cash rate. The issue, of course, is when are the interest rates going to start coming down? Well, obviously the answer for the moment is not now. In fact, what we've just seen has been the banks completing a round of increases in predominantly the 1 and 2 year fixed mortgage rates. 3, 4, 5, they've gone up a bit, but the margins which the banks run on the 3, 4 and 5 year fixed rates are still quite a bit below average, and maybe if we were at a different point in the interest rate cycle they would actually be increasing them further, but because basically no one is borrowing for any longer than 2 years, it's pretty much immaterial. The margins the banks are earning now on 1 and 2 year fixed rates are almost at the average levels for the past 2 years, so I don't think that we're going to see those rates going up again unless we see a repeat of the key factor over the past 2 to 3 months, which has caused those mortgage rates to go up, and that has been increase in New Zealand domestic borrowing costs because of an increase in interest rates in the United States, driven by stronger than expected data, especially on the United States labour market. Some of the data have started to ease off just a little bit recently, so hopefully we've seen the peaks in those interest rates over there, although the markets are still expecting that there will be 1, maybe 2 more increases in the Federal Reserve's funds rate. Now, another piece of news we got last week was the net migration flows rising to a new non-pandemic record of 78,000 net inflow into New Zealand over the past year. Yes, we're losing people to Australia, and yes, we're losing Kiwis overall. The net flow of Kiwis in the past 12 months has been about minus 30,000, which is above the average for the past 20 years or so, which is around about 25,000 or so annual net loss. Obviously, we're getting a lot of people coming in from the rest of the world. Now, similar thing is happening in the likes of Australia, Canada, United States, the UK, etc. We're seeing a lot of strong net migration numbers, and out of that, not so much in New Zealand yet, but certainly in Australia, increasing debate about pressures on the housing market because of the rapid acceleration in population growth. In Australia, they haven't had the construction boom which we have had in New Zealand, so I don't think this is immediately going to translate into a new surge in housing numbers. But what I've observed over the past 4 decades or so operating back here in New Zealand is that when the migration numbers get strong and the housing market is starting to rise, people will fixate on the net migration numbers and say, well, it's obvious house prices are going to go higher. Look at the strong population growth. We had Best Buy now before the house prices go even higher. We're not there yet, but that's one of the many factors I think that's going to come along next year and cause what I think is a rate of increase in house prices which will surprise quite a few people. Of course, next year it's highly likely we're going to have interest rates going down. The Reserve Bank doesn't expect to cut the cash rate until very late in 2024. I'm in the camp of thinking they'll probably be able to do it in the first half of next year, meaning fixed mortgage rates probably starting to come down before the end of this year. But of course, we've got the election to happen October 14, and of course, if there's a change there to the current opposition, National Party, then there are other implications for the housing market with the investors likely to be drawn back in there again. So personally speaking, I think for 2024, we're looking at a lot of factors going to come together and cause some quite interesting things out there in the housing market. All the best out there.